Welcome to The Explainer. Today, we're diving into something that's totally transforming retirement planning. We're looking at some fantastic research and insights from diversified insurance brokers to map out a much smarter way to protect your nest egg without sacrificing your peace of mind.
So what if you pay for long-term care for decades, but you never actually end up needing it? Honestly, that one terrifying question is exactly why so many of us hesitate to protect our hard-earned money. It's the ultimate financial anxiety. You want to be protected, you want to make sure your family isn't burdened, but you absolutely dread the idea of throwing your wealth down a bottomless well if you end up staying perfectly healthy.
Okay, let's take a quick look at our roadmap. We're going to cover the dilemma, why hybrid policies win, customizing your coverage, smart ways to fund it, and finally, the broker advantage. Let's get right to it.
Section 1. The Long-Term Care Dilemma. Let's tackle the elephant in the room.
All right, so here's the crux of the issue with standalone coverage, the traditional insurance trap. It's that dreaded use-it-or-lose-it model. Families are understandably anxious about paying decades of premiums that literally vanish if they stay perfectly healthy. I mean, think about it. You pay year after year, sacrificing your current lifestyle, and if you're lucky enough to never need care, the insurance company just keeps your money. It's totally understandable why there's so much emotional resistance here. It feels like a massive financial gamble.
Which brings us to Section 2. Why hybrid policies win, and how they guarantee value.
Now this completely flips the script. A hybrid design actually solves this whole dilemma by making sure the dollars you put in retain their value no matter what happens. Unlike traditional use-it-or-lose-it insurance, hybrids guarantee value across every possible outcome. If you need care, it pays for your care in a big way. But if you never need care, it pays out a tax-free death benefit to your family, or it retains its annuity value. Your money is never wasted. You get the protection, plus this incredible emotional relief knowing your legacy remains totally intact. When we look at these options side by side, it's basically night and day. With a hybrid policy, your premiums are locked in. They are not going up. But traditional premiums, they can skyrocket, creating this huge uncertainty when you're on a fixed income. And trying to self-insure, well, that just means every single dollar of care drains your own retirement savings. Hybrids just take that uncertainty right off the table, offering guaranteed fixed premiums and returning value to your heirs.
So how does this actually work behind the scenes? Well, these policies are built on one of two foundational chassis, a life insurance base or an annuity base. You're essentially taking one of those base products and adding a rider to it. It acts like a massive amplifier, multiplying your base value into a giant pool of care benefits exactly when you need them. You're leveraging your money so $1 can do the work of 3 or 4. It's pretty brilliant.
Moving right along to Section 3, customizing your coverage. Let's see how this builds into a plan that actually fits you.
Let's redefine the word affordable for a second. We're not talking about the absolute cheapest generic quote you can find. In the hybrid world, affordable really means right-sized. It means meticulously structuring the premiums and benefits so they actually match your household budget and the real cost of care in your specific area. You don't want to over-insure for highly unlikely scenarios, but you definitely don't want to under-insure the real statistical risks either. To get that absolute perfect fit, you have some incredibly powerful levers you can pull. Think of it like adjusting the dials on a master soundboard. You can tweak the monthly benefit amount, you can change the length of the benefit period, or adjust the elimination period, which is just the waiting period before your benefits kick in. Kind of like a deductible in days instead of dollars. And my absolute favorite feature here? Shared care riders for couples. This lets both spouses access the exact same pool of benefits. It is super cost-effective and fits what you need, almost like ordering custom-made right off a menu. But timing is everything. Keep in mind, there's a planning sweet spot right between ages 45 and 68 where you'll find the best pricing and underwriting. Because look, as we get older, premiums inevitably go up and underwriting gets way stricter. Having this proactive conversation at age 57 is going to give you far better, more affordable options than having that exact same conversation at age 67. Getting ahead of this is a massive advantage. All right, Section 4, smart ways to fund it. Let's talk about protecting your cash flow while paying for this coverage.
So, the source outlines 4 primary funding structures. Whether you want a one-and-done lump sum single pay, or you want to spread it out over a short pay schedule of 5, 7, or 10 years, or even a level pay for life, there is a payment structure tailored for your specific cash flow. A lot of folks absolutely love that short pay option, by the way, because you can knock out all your premiums right before you retire, totally removing that burden once you transition to a fixed income. But here's maybe the smartest strategy we found: moving money from an underperforming bucket to a more productive one. Instead of squeezing your monthly budget for new money, a lot of families just smartly reposition lazy assets. Money sitting in low-yield CDs, old savings accounts, or underperforming annuities. You just seamlessly slide those funds into a hybrid policy. You're not losing the money, you're just giving those dollars a much better, highly leveraged job to do.
And guess what? The IRS actually rewards you for doing this. Under tax code 7702B, your long-term care benefits are received completely income tax-free. The death benefits, also tax-free. And if you're repositioning an old annuity with taxable gains, you can use what the IRS calls a 1035 exchange to transfer those funds straight into a hybrid policy completely tax-free. It's just a fantastic IRS-approved way to protect your wealth without creating a nasty tax bill.
Which brings us to our final section. Section 5, the Broker Advantage, your expert guide.
Navigating all these tax codes, product chassis, and funding structures can be overwhelming, right? That's exactly where Diversified Insurance Brokers steps in. The really amazing thing about their approach is they don't just push one single product from one company. They're independent brokers. They actively shop the entire market to find the absolute best fit for your unique situation. They do all the heavy lifting to ensure your plan aligns flawlessly with your goals.
To put their incredible reach into perspective, Diversified Insurance Brokers maintains contracts with over 100 highly rated insurance carriers all over the country. They aren't boxed in like some neighborhood agents might be. They have access to basically the entire playing field, bringing the very best of the market directly to you.
And that translates to over 1,000 products. It's literally the largest selection of insurance products to choose from in the country. With over 1,000 products to analyze, you are definitely not getting a cookie-cutter policy. You're getting a masterfully tailored plan, built backward from your specific local care costs and your specific budget.
Plus, you're getting serious expertise. This family-owned agency is led by Chief Underwriter Jason Stoles, who brings over 25 years of real-world underwriting experience right to your retirement strategy. They know exactly how different carriers view your specific health profile, so they know exactly where to apply to get you the absolute best rates available.
So that brings us to our final question for you today. Which hybrid policy fits your unique retirement plan? Now that you know there's a much smarter way to protect your nest egg, one that guarantees your money isn't wasted and brings you immense peace of mind, isn't it time to let the ultimate experts at Diversified Insurance Brokers shop the market and find the perfect fit for you? Thanks so much for joining me on this explainer, and we'll catch you next time.